Hello everybody and welcome to the weekend update for Sunday, May 22nd. Let's dig into this here first with a little disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. All right, so let's take a look at what we got coming up this week. Today is Monday, so we're a day late or a day behind normal on this, but that's okay because U.S. markets are closed today. Futures markets were open, and some of the global markets were open, and everything was looking pretty bullish. I know Asia was up nicely, Europe was up, U.S. equity futures were up, oil's up, copper's up, so things are continuing to look fairly bullish from last week. We'll see what happens overnight tonight, but so far things looking good. We'll take a look at the charts in a sec. So coming up on Tuesday, this is a little odd because it doesn't happen very often. I don't think actually, I can't remember the last time a Fed chairman actually went to the Oval Office, but Jay Powell is, oops, sorry Jay, I spelled your last name wrong, but Jay Powell is meeting with President Biden in the Oval Office tomorrow. And like I said, kind of unusual. Presidents and Fed chairmen don't meet very often. And they certainly don't meet very often in the Oval Office. Their meetings are kind of supposed to be casual, and this seems serious. So, I don't know. Can we expect anything out of this? I don't think we should expect Jay Powell to say anything. Although, in the past when he's met with presidents, he seems to have changed his outlook and his sort of his balance between hawkish and dovish. I can think of when he met with, specifically when he met with Trump, he went in fairly hawkish and came out fairly dovish. I don't know. I mean, he's already fairly hawkish now. They're going to be talking about inflation and everything, but what more can he do, right? I think Biden will be using this for, to try and score political points and say that, Jay Powell's our man. He's on it. He's got this inflation thing under control. It'll be interesting to see what comes of this. On Wednesday, we've got the ISM Manufacturing Purchasing Managers Index, which is a bit of an inflation indicator, and we also have the JOLTS job openings. So, we'll see how the job economy is doing. And I think that we're going to see that job openings are shrinking because, companies are starting to announce layoffs. On Thursday, we have the ADP non-farm employment change. So ADP is a payroll processor. So they sort of give an advanced look to what is the really important number, which is on Friday, non-farm payrolls and unemployment rate. So the market will definitely be watching, both of these quite closely. But the big one, the important one, is on Friday because it really is the official number. So this is definitely something that can change a trend that is in motion. So for instance, if this rally we're in right now continues through the end of the week, this non-farm payrolls number has the potential to halt it and reverse it. If the rally stalls out, say on Wednesday or so, knowing that this number is coming, stalls for a couple of days, and the non-farm payroll comes in, good. If the market's happy with that number, that could definitely resume the rally. So this is something we definitely need to be keeping a close eye on Friday. So we've got earnings this week. Still some earnings coming in, but as you can see, it's really starting to slow down. There isn't a lot that I'd really consider terribly important. On Tuesday, Salesforce, that's a big one. So that's after the close on Tuesday. Some other, sort of second-tier names on Tuesday that people might find interesting. On Wednesday, nothing Wednesday morning really that's interesting at all. Wednesday after the close, we've got GameStop. Some people might be interested in Chewy. A couple other, second tier names there on Wednesday that people might want to watch. Nothing really terribly important on Thursday morning. Thursday after the close, we've got CrowdStrike. That's one I'll be watching closely. Lululemon Lulu is a very popular stock, so that may be watched, and a couple other names that might be watched. And that's about it for this week. So we're really starting to wind down. Earnings season's pretty much over now, and it'll kick off again in a couple of weeks. So what else do we have coming up here? So we're going to take a look at some charts. There's a breadth test going on. I was going to show you some breadth charts, but TradingView seems to be having trouble with some of their breadth data, so I'm not sure if we're going to really get into that or not. We're not going to look at any charts of breadth. There's not much to show you, unfortunately, but you'll just have to take my word for it that there is a breadth thrust going on. We'll look at some commodities, some sectors, and there are a few setups. So why don't we, whoops, we don't want to go there. All right, we'll start off here. We're not going to look at that. We're going to look at the SPY. So S&P 500, like all the other major indices, has had a nice rally at the end of the week. I mean, really, it started at the beginning of the week, didn't it? This red candle here was last Friday. Monday we gapped up a little bit, and then on Tuesday we gapped down. It sure looked, Tuesday was ugly for a while. It sure looked like we were going to go and test these lows from the previous Friday and then, likely go lower. But it managed to turn it around intraday and drew this nice looking hammer. Now, you remember last week I drew in this orange line what price action could look like if we were going to have a nice bounce off of here. And, we're moving up. I thought we were going to find resistance at this 411 level, but we got through that on Friday, which is really interesting. Now, we've stalled on Friday. I say stalled, that sounds really bearish. All this price action is quite bullish because we closed right at the highs on Friday and actually continued a little higher after hours, I think. Yeah, we did. So we stalled out though, or closed right at this double bottom from March. So that's an interesting place for it to have stopped and closed on Friday. I'd said I'd kind of like to see it take a break for a couple of days once it got up into this 411 level. Well, now that we're through it, I'd like to see it keep going, and that break, I'd like to see it, be taking a break up and around here, up in around where this 50-day moving average is and this 428 level. That would now be a good, a couple more days of rally, and then take a break, go sideways for a few days in here, then we can try and go higher. So that's what I'd really like to see. We don't always get what we want. What I don't want to see, though, is for this to just roll right over on Monday and start, breaking through these levels again. That would be quite bad. If it did roll over and manage to stay sort of, above this pivot level right here, I'd be okay with that. We'd be right back in consolidating where I thought we might consolidate. That I'd be okay with, I suppose. But really, I'd like to see this keep going. The NASDAQ has not gotten through its important level yet. You can see that it's still got a ways to go before it gets up to that sort of similar level the SPY is at right now. So this will be interesting to see. Does it go up here and go sideways for a bit, or does it go up here and go right through? IWM, the Russell 2000. This has moved right into that important level. So we've got quite a resistance level that it's moved into. And again, so the question is, does this go sideways from here, which should probably be the healthiest action, although not if other indices are moving on through. So yeah, it'd be really interesting to see what happens to this on Monday, because we've got another level of resistance right here with the 50-day moving average, and then this resistance here. So yeah, watching that one closely on Monday. Microcaps, they haven't come into that important level yet either. Should probably draw that in. Right in about that area, about the 119 to 120 area is going to be important level for the microcaps. But, you know, again, moving up nicely here. The volatility index, we were talking about last week, we were talking about, you know, sort of this box within a box, right, or a base within a base. And now we're down to the lower part of that box. You know, if we're going to continue to rally here, we need to see it fall out of this box and start moving down towards this 20 level. Because we're still fairly high here with the volatility up and around 26, just over 26. So we need to continue this move down in volatility. The 10-year yield, this is not fulfilling that head and shoulders pattern we talked about very quickly. And it looks like it's finding support at the 50-day moving average. But it hasn't completely failed. You know, we don't have a failure of this this breakdown from the head and shoulders. There's still plenty of time for this to move down to this target area of 240. Last week, let's look at the dollar index really quick. Here we go. So the dollar index is rolling over quite nicely. You know, remember I was talking about how important this resistance level was when we were coming into it, and I was quite concerned when we broke through, and happy to see when we pulled back quite quickly. We've now broken through another minor support level, and this minor support goes way back in time as well. Yeah, it goes way back to here to 2017 from that little, you know, bump up there. But let's zoom back in on this. So it broke down through there. It's you know, falling. It's now right at the 50-day moving average. Now the 20 didn't do anything for it, and it doesn't really look to me like the 50 is going to do anything for it either. So I think we can see more downside here in the dollar index. So if we're seeing more downside in the dollar index, that is good for emerging markets. You know, European markets. It's good for commodities, and it's good for equities as well. So let's take a look at some of these. We looked at EFA. This is sort of the Europe and developed Far East and Australia. Oops, we want to be here. There we go. Yeah, so this is the ETA. You can see this is, you know, continuing to rise nicely. You know, so this is developed economies outside of the United States. And so if they're doing well, you know, the global equity markets are doing well. And emerging markets, so these are, you know, sort of the less developed economies around the world. And they had a little bit of a pullback after we looked at it last week, but in the last few days are starting to move up again. Nowhere near as strong as the more developed economies, but they're still moving up. Now, this is all looking fairly bullish going forward. Let's go back to the SPY. You know, is this a rally that continues? Is a bottom in? And that's a question I'm not ready to answer yet. This is certainly what chapter 1 of a bottom going in would look like. You know, are we coming out of the bull market? Well, again, this is sort of like, this is what the beginning of that would look like. Is this for real? I don't know. You know, I mean, it looked for real back over here in March, didn't it? You know, we had this low, we put in a double bottom that was higher than that low, and we rallied for a couple of weeks really nicely. You know, we since rolled over and ended up where we are now, right? Where we did put in what is looking like a really nice bottoming pattern here, and we're starting to rally really nicely. And even after that day, you know, I think the key for me and the reason I've become quite bullish is this hammer candle right here on Tuesday, when it really looked like we were going to roll over and put in new lows, and we reversed intraday, and we got strong, and that strength continues. Now, this, some people are going to talk about the volume. The volume's light. Well, I mean, Friday was the day before a holiday, and volume is typically light, so I don't think we should be concerned about that. Institutional traders and fund managers, they do take off and go on holidays. I kind of was half joking in the Discord about them taking off early on Friday and going to the Hamptons. They do. They actually do that. The top guys in these funds and the top guys of these institutions do take off early, on a Friday of a long weekend, and take off and go to the Hamptons. And they leave the junior people in charge, and they usually tell them not to do anything. Don't break anything, right? So it's not unusual to see lower volume the day before a long weekend. We actually had higher volume on Friday than on Thursday, so that's actually quite bullish. And I think if this rally is going to continue, I think we could see a real surge in volume. And like I said, there's a breadth trust going on in here too. We are moving through moving averages here. We've picked off the first one, right? We've picked off the 21-day moving average. And there's a high percentage of stocks. That is actually one breadth chart I can show you. I should show you that one. Whoops. I should show you that one. Let's see. Percentage of stocks above their, oops, no, 100-day, no, 20-day, there we go. That one was working, yeah, and let's turn this into a line chart. Sorry, I apologize for not having this ready to go for you guys. There we are. Yeah, so this is a percentage of stocks above the 20-day moving average. And you can see we'd gotten down quite low here. Not as low as we could get, obviously. But, where we had been was quite low. And now where we're getting is pretty high. So 74% of stocks are above their 20-day moving average. That's a huge change, fairly quickly here. So that's good news. Now we still have some work to do on the 100-day moving average. Still in quite a downtrend here, but moving up. But it's this one. This the number of stocks. The difference between 16% were above the 20-day moving average just a few days ago. And now we're up to 74% of stocks above their 20-day moving average. That's a big move. That's an important breadth thrust. And that's, again, something you see at the end of bear markets. But we've had that a couple times before, as you can see. So, we do still need to be cautious. We can't be running out and buying everything we see. This is going to stall. This is potentially going to roll over. Or go sideways for a bit. And that's when it'll really tell us if we're putting in a bottom or if this is just a short-term low. What happens after we stall out? What happens if we pull back a little bit? Do we pull back deeply or just pull back a little bit, go sideways, and then continue to move higher? This is what we need to watch for, and that's where our confirmation is going to be, whether this rally is going to continue and whether the bear market is over. So those are things we'll be watching for, and of course we'll be talking about that in these weekend updates and our ticker talks as well. All right, so what have we done? We've looked at the, we haven't looked at the M2 money supply or the DCA timing tool. So let's look at those right now. First we'll look at the DCA timing tool that we talked about in a recent educational session. And you can go back in the Discord and the session recordings and watch that if you haven't already. But you can see we're still in the red zone on the weekly basis. We've got a really nice strong candle here. And the MACD line is just starting to turn up. But that's got a lot of work to do before we can turn green here. I've got the 20-week moving average marked on the chart, and we're still well below that. So, we've probably got at least another week, maybe two, before we move enough to turn green and, start getting bullish and start adding to our positions. If you're following this system strictly. For me, this is, Looking at a daily chart, you can see on the daily the MACD has rolled up now, so with the MACD above the signal line. So that's nice to see. And this is a signal to me that yes, we can take a little more risk. I can have a little more risk taking in my attitude, but it is still very risky. So I'm looking for really nice setups. And I'm not ready to go into any long-term setups yet. I am taking shorter-term setups and understanding that they're very risky. So I want these to be very risk-defined. I want them to have tight risk definition. So that's our DCA timing tool, and we were going to look at. We looked at the dollar. Oh, the M2 money supply. Here we go. Where have I got that? Cool. Okay. So yeah, here's an interesting little chart. So M2 money supply is basically the supply of cash in the system. M2 is M1, which is cash. Cash and checking accounts is your M1 money supply. M2 money supply is the M1 money supply plus more liquid, more liquid assets like short-term bonds or things that or cash equivalents, things that you can turn into cash really quickly. So that that M2 does not include like your IRAs and stuff that you're not really supposed to be pulling out and turning into cash really. But you can see here that the M2 money supply goes up, obviously, consistently with the growth of the economy, right? This is really what this is showing you is your GDP growth. So you can see that we can put a really smooth trend line on here. It since the mid-90s has never really gotten very far from that trend line until COVID hit, and the Fed just dumping money into the system. But what's happened very recently in the last month, and this is for the first time in about 13 years, the money supply has shrunk. We've actually had a contraction of the money supply in the last month. So that's really quite interesting. It does show us that, the Fed is getting a handle on all of this excess liquidity that they've put into the system. And this is what the market has been waiting, this is what the market has been pricing in, is this event right here with the money supply shrinking and the potential knock-on effects of that, one of which is, the potential for a recession. So here we are. This is what we've been pricing in now for the last 6 months. It's here. It's happening. So the questions that this brings up to my mind is, does the market start to freak out because they can actually see this happening now? Does the market start asking questions? Are we going to be, pull back to this trend line very sharply, or are we going to go sideways for a while until we get to the trend line and then start turning back up again? Now, if all we did was go in a straight line sideways, we're looking at January 2023 before we hit that line and then potentially start to turn up. If this starts to pull back steeply, that is a little more of a concern, and that I would start to be worried about recession. So this is something that I'm going to be watching a little more closely now that this is actually rolling over, to see just how steeply this rolls over. Certainly not going to roll over as steeply as it went up. That would be terrible for the economy. But I think it's more likely we kind of come down a little bit and then start to just go straight sideways for a while. And I think that's, that would be the soft landing that the Fed is talking about, and might keep us out of recession. So yeah, interesting thing to go in here, and we'll look at this again. Once the next data point, I don't think is until the end of, Actually, we should be getting another data point any day. Should be getting the April data point shortly. So yeah, I'll be keeping a close eye on that. All right, let's move into our commodities. Okay, so gold kind of going sideways, not much going on here, nothing really exciting to see here. Silver, again, just sort of going sideways. Have come off this this short-term bottom, but again, not really exciting. This is kind of hanging out at this old resistance level. The gold miners, same sort of thing, right? Maybe making a little bit of a flag here, though. So that could be interesting for anybody who's interested in these miners, but I don't know. It seems to me there's an awful lot of overhead resistance. Copper, we were looking at this wedge in copper, so let's just kind of update that line. It's kind of sort of breaking out of that, and kind of sort of not. I mean, did it try and break out of this on Friday? It's getting a little messy. We might need to draw the wedge like this. But when we see an ascending wedge like this, we expect it to break out to the downside, and that hasn't happened yet. It tried to last Wednesday, but it pulled right back into that wedge. So that's quite interesting. Freeport Macroman, one of the big copper miners. We were looking at this potential bear flag last week, and it is moving out the top of that. So that's definitely good news for anybody who's in this and anybody who's interested in copper. That's quite interesting, but we've got a fair bit of resistance overhead. TECK is another copper miner that had been doing quite well, and it continues to do quite well. We were looking at this pennant or triangle that it had formed in this uptrend, and it's broken out to the upside of that. So we can expect that to continue to move higher. There might be some resistance coming in overhead, but yeah, that looks looks really good for TECK here. Uranium, we were looking at these bases that had kind of take a move down, draw a base, take another move down, draw a base, but now this seems to have been consolidating right at the top of the base all week long, and you know how much I love these consolidations at the top of a base, right? And it looks like on Friday it tried to break out of that. A little kind of a hammer candle here. Normally we see a hammer candle after a downtrend, but nonetheless, this is quite interesting. We've got that the declining 21-day moving average just overhead, so it's going to be really interesting to see what happens here. I want to watch this closely on tomorrow and Wednesday and see if it can get a move. I suspect when this starts to go, it could move quite quickly. So that's your physical uranium ETF. Cameco is the big uranium miner. And this one also had that ascending wedge that we've been sort of keeping an eye on. We'll extend that now. And it appears that it's maybe broken out the top of that. And again, we expect to see these break out to the downside. This looks like it's breaking out the top side. So is it a breakout, or is it the kind of thing where we're just going to sort of extend that up? For now, I'm going to actually call that a breakout. There we go. So yeah, this again, this could move really fast. Uranium's one of those spaces that Wall Street Bets gets in on. Once this starts to move again, could move really quickly, could get some play. So worth watching. DBC, the General Commodities Tracking Fund, we've been watching that ascending triangle set up there with all this overhead resistance, this triple or quadruple top. It has broken out the top of that. So will that continue? If we're going to play, we really should play that for continuation if we were going to play it. DBA is the agricultural commodities. It's not as strong. You know, after after its breakout failed, it pulled back quite hard, and it seems to be trying to recover now. There will be lots of overhead resistance here, but so don't really see a play in here just yet, but might be worth watching. Wheat we were looking at, it had tried to break out, pulled back in. It looks like, you know, sort of the rest of the agricultural commodities, but, you know, still on an uptrend here. XLE, our energy ETF, looking great, powering higher. You know, this looks great. It's pulling away from the trend line and the moving averages, so it's, you know, starting to accelerate a little bit. Hard to get in it here, right? But if you're in it, you're definitely enjoying this ride. Crude oil. Crude oil's a little interesting because, you know, it was having a harder time, you know, getting going. It's been lagging behind that XLE ETF, the energy ETF, but it seems to be breaking out now. So this definitely, you know, looks like it's going to be moving higher and testing these highs right here, which I think is an all-time high in crude. What am I looking for? Here, let's just do this. So yeah, this is a level here up in the 129 to 130 level that we need to watch out for on crude. XOP, the oil producers ETF, that has broken out to new highs, very strong in the last week or so. No reason to think this might slow down, except that it's getting a little parabolic and getting a little stretched from the trend line, but this can get more stretched. I think this has got room to go higher. Oil services ETF, we've been keeping an eye on this one as well, and this is really starting to move again. So, you know, this looks like it's definitely going to go up and test these highs and probably, I would think, breakout. Occidental Petroleum is one of the oil companies we've been watching, and that has broken out to new highs. ExxonMobil is another one we've been watching, and that is breaking out to new highs. This is really strong, just grinding higher. You know, not getting overextended like some of the others, just making a nice strong move higher. DMLP is one that I pointed out recently. We talked about, I think I pointed it out after this breakout, or I can't remember if I told you about before this breakout. I went into it down in here somewhere, I think. Anyway, it made a nice breakout of this base right here, pulled back, and I'm positive I told you guys to, you know, watch out for a pullback here, because I think I was a little late pointing it out, but it pulled back and bounced. And it's just continuing to move higher now. This is making a nice move. I'm really happy with the action going on here. Here's one that might be interesting, because I think you could still maybe get it. Still kind of high risk here. We might be a couple of days late on this. Obviously, we're a couple of days late on this breakout, but it could still get some play if oil continues higher. Now, this is a midstream company, so they basically, I don't actually know what this company specifically does, but it is in the space that, you know, where your pipelines are, you know, where some of the refineries and that sort of thing are. So this is Western Midstream Partners. And it's had a nice little breakout here. I am a little bit concerned about these, you know, selling wicks on top of this. But you know, if this continues higher, this looks like it should go much higher. There's definitely room for this to continue going up. You know, we've got to go way back, you know, before we find any resistance from back here, right? But no reason to think it can't get up into this, you know, go and test these, you know, 32, 33 kind of level up in here. But again, risky here buying it now because they are a little late. What do we got? Metals and mining. Interesting to see metals and mining breaking out to the upside of this space, ahead of really anything that's going on in gold or silver or really any other metals. So this is a fascinating move, and maybe should make us take another look at gold and silver and some of the other metals. Industrials made a really strong move this week. You know, coming off these lows, have broken through that through this first downtrend line. This is up through the 21-day moving average. So this is actually really bullish action in here. And one of the companies in the industrial sector, and also really a subsector of this, is defense. I know somebody in the Discord, I'm not sure if it was in a ticker talk or was in the Discord, was talking about defense a little bit. This is one of the big players in that space, and this is a really nice looking setup here. You know, so we've got a bit of an ascending triangle here. We've got, you know, what was pretty much a triple top, and we are drawing a bull flag right at resistance. And again, you know, I love these consolidations right at resistance because they very often move to breakouts that go and run for a while. So we've got a bull flag right under resistance. This looks ready to go. It looks like it could go tomorrow. And it's fairly risk defined. You know, if you're going to play this, you know, your first stop is going to be just below Friday's low. I think you can probably move that up fairly quickly, you know, to below the low of these two red candles. That'll put you sort of in the middle of the lower part of that bull flag. And once you get out above this level, this 477 level here, you know, then you can easily move your stop up and start getting it tighter and just below that level. So this could be a really interesting one here. Again, this is not financial advice, and I'm not, you know, recommending any of these trades, but this is something that is worth watching. It is kind of a classic setup. Consumer discretionary had a really good week, which is, you know, it was important for that to have a really good week because it's pulled back really hard. It's been quite weak. So 3 strong days here. I'm not ready to get back in this space. I kind of don't trust it. I think we're going to see more downside in here. You know, whether that downside happens tomorrow, we've got a little bit of resistance here, although it seems to have tried to break through. The 161 level, probably stronger resistance. Retail just got, you know, hammered, as you know. Had a good few days. Again, still not ready to trust it. We've got some resistance here, some more resistance up here at 72. I wouldn't be surprised to see this roll over, or at the very least to be a weak sector among all sectors. Costco just got so messy. You know, they've had their earnings now. They gapped up. Put in this, you know, gap here on their earnings. Gapped down the day after earnings and then continued up. I don't trust this. I think this needs to roll over and at least either test or fill this gap before it can move up again. I just, you know, I'm going to admit this is a bit of a gut feel thing, but I do not trust this move right now in this. I think there's more downside here. So for me, this one's hands off for now. It is something I'll be keeping a close eye on, though. Because I do want to take a position in this again, but I'd really like to see implied volatility. I'd like to go in with leaps again, but volatility is so high in this right now. They're very expensive. Financials have done really well. Good to see these, you know, make a move like they have. I like the look of this, the bottoming pattern on this a lot better than, say, you know, we saw in consumer discretionary. Important to see financials, you know, doing well and getting some of this downside back. Technology had a really good week, or a good few days. That's important to see, but it's got a lot of resistance that it's come into right now. So it'd be interesting to see, how strong is this resistance in this area. If we can get through and then get through this 50-day moving average, I'll be a little surprised, but I'll be really happy as well. Because it'd be nice to see it go and attack this gap up in here, and then the 100-day moving average. So good to see TECK making a move. Semiconductors move here I don't think was quite as strong. It did gap up. Should actually probably draw this gap in while we're here. Did gap up on Friday, which is interesting to see. So we'll get that drawn in case we get a pullback there. But yeah, sort of gapped right through a potential resistance area. It's moved up and is now closed right around the 50-day moving average. Does this continue higher and go to test this 100-day moving average? Hard to say here. It looks like it's going to. AMD. So these have been drawing nice bottoming patterns, right? They've been putting these bases in a lot of the individual companies in the semiconductor space. So, this one's AMD. It tried to break out of this resistance and failed, came back in. Now we're breaking out again. We'd put in a higher low, so that's great, right? So we had this double bottom. We put in a higher high, and now we put in a higher low. Can we go and put in another higher high? We do have some resistance overhead. We've got a downtrend line overhead. We should probably extend that out now. We've got the 100-day moving average overhead, and we've also got this horizontal level. So this is an area we should expect it to stall. But what happens after it stalls there? Does it pull back, come all the way back down to this support level? And does that act as support? Does it maybe come down only as low as this pivot right here? That's something we'll have to watch out for. So important to watch, watch the price action after it gets to here. Maybe it goes right through. That would be a little surprising. I think it stalls, goes sideways, maybe rolls over a bit first. That price action will be very telling after it gets to that area. Micron is not as strong as AMD. You can see last week we were talking about it maybe moving up into that resistance level, going sideways and breaking through. That thesis is still intact. It's had quite a move to get even to where we are. So it's stalling out here is almost a no-brainer. I think it'd be difficult I wouldn't want to see it go through there. If it goes through there, it's going to fail for sure. I think if it stops before that, it's got a much better chance of just going sideways and then breaking through. Communications sector. Another one that really needed to start putting in a bottoming action and have a nice few days of rally like it has. So we're still kind of in the base. It's sort of lagging some of the other sectors a little bit, but it still has lots of room to go before it meets any resistance. So there's 2, 3, 4 days of rally even to get up into this resistance area. And obviously I'm going to want to see it move sideways once we get there, so it can build some strength to break out again. When we look at some of the FAANG stocks, still seeing some. It's nice to see these rallies, but Facebook in particular, lots of resistance coming into right now. We've got a downtrend line, 21-day moving average. Just above that is a 50-day moving average. All of this stuff, all these, So yeah, it's going to be a slog. I think a tough slog for Facebook on the way up here. But if the rest of the market is rallying, Facebook is going to grind its way up here as well. Apple, I think was looking a little better. Yeah, so Apple had a much stronger move. What happens now? So we're in a resistance zone. We did get through the 21-day moving average. Do we just blast right through this? Or are we going to go sideways? I think it sort of depends what the market does tomorrow. Amazon. Amazon has obviously been quite weak. Put in kind of a double bottom here. Now what's going on here? We've got a bit of a pivot level here. It could, quite easily go through here, but we've had 3 days of rally into, what is a bit of a resistance. Just let me draw that in there just in case it fails. So yeah, tough call. Tough call if this goes sideways, rolls over, or breaks on through. Breaks on through, then we've got to watch out for this, 2,500-ish level, and then the 2,600 level above that. Netflix. So we were talking about this in the ticker talk on Thursday, so I won't go into a whole lot of detail, but this is starting to look like a nice little bottomish pattern. I pointed out in the ticker talk, I pointed out a way you could possibly play it because it is fairly risk defined and it seems to be behaving. So maybe go back and watch Thursday's video on the Netflix if this pattern looks interesting to you. Google. Yeah, Google had a big spike down there on, when was that, Tuesday? Tuesday, yeah. Trying to, recovered from that. Nice 3-day rally, but lots of resistance. Downtrend still mostly intact. But, there's still room to go before it gets into serious resistance way up here. Tesla. So Tesla's doing, it's come off this bottom nicely. The whole Twitter thing is a bit of a mess for it, and it was, I believe it was Wednesday, that Musk was talking about restructuring the Twitter deal so it would require less of a guarantee or whatever of Tesla shares. I'm not sure totally sure on the details. And it's had a nice move up with the market since then. Coming up into resistance though, that 21-day moving average, some more resistance. So again, tomorrow is a key day for this, right? I'd like to see it get through. I don't want to see this go sideways. I'd like to see it continue on through here and then start going sideways up in here at this level. Healthcare. Healthcare has been making a nice move off the bottom here. You can see that this is kind of outperforming some of the other sectors, right? Because its move, kind of started sooner. It did have the, bit of a pullback, but its rally started much sooner than the rally in the other sectors, and it's just picking off these moving averages here. It got through the 200-day, the 100-day, the 200-day, and it's now at the 50-day moving average. And I guess, we can see that there has been some resistance in this area before. Let's get that line in there, because this might become important if, I think there, whoops, I don't want that to be a major line though. That one, there we go. Yeah, if this rolls over, this is going to turn into a critical resistance here. I think, given how bullish it was on Friday, I think it cracks right through this. Biotech. Biotech's not anywhere near as strong, but this is interesting. We've, building this nice base here, and we've seen this. We're going to see this a lot actually in the next few sectors coming up. But this is a nice looking base to me, and it seems to want to break out to the upside of this. So this will be interesting to watch, and it's it can easily get up into the 50-day moving average and that previous pivot up in there. And one of the stocks, or an ETF actually, in the biotech space, you might laugh when you see this, but this looks really interesting to me. This looks like it's breaking out of its base. This looks to be moving higher. It looks like traders are using ARKG, the ARK Genomics ETF, to kind of front run the breakout action that we might be seeing that's happening in XBI. There might be a play here. It's super risky because, this thing is in a massive downtrend. I'm not calling a bottom on this by any stretch of the imagination. I'm saying there could be a trade in this. Now, this looks eerily similar to this, right? We had this big downtrend. We bounced, started drawing a base, broke out to the upside, hung around above the base a little bit and then failed and rolled right back over. So here we got a downtrend, right? Move up a little bit, draw a base, start breaking out of the base. Really similar action, but you know, if this starts to go, this could move really quickly. It's going to find, I think, a lot of resistance up in this 45 area though. But still, you know, you could easily have a $10 move in this pretty quick. So that might be worth watching for some of the traders. You know, could be a quick short-term move. Lilly is one in the healthcare and pharma space that we've been watching. We've been waiting for a breakout on this, and it finally happened on Friday. You know, this breakout now looks for real out of here. Had a bit of a false start before, but you know, the whole week it was just, you know, moving up through here and then finally broke out. So nice move in there, and shout out to Bones who called this one out. Real estate making a nice move off the bottom here. You know, these are defensive sectors we're getting into now, and you know, we don't really need to see these moving up, right? I mean, they're defensive. We'd rather actually see them going sideways and the rest of the market moving up. But a strong move here in staples after that giant move down with, you know, Walmart and Target's earnings. So it recovered quite quickly. So that's good. You know, to see a massive move down like that and then a quick recovery is pretty bullish and bullish for the market, I would say. Utilities, they've moved to the upside out of this base that we were watching. So again, you know, a defensive sector that's moving fast doesn't really thrill me. I'd rather see this going sideways or moving up, you know, a little slower than this. Because I don't want to see money moving into defensive spaces. I want to see money moving into tech. I want to see money moving into things that are riskier. All right, so last week we were looking at, it was either last week or Thursday, we were looking at the solar sector, and we were looking how, you know, we were getting a bit of a consolidation. It was very early, you know, potentially consolidation under resistance. I was saying maybe it turns into a bear or a bull flag, and so TAN, the solar sector ETF, has broken out of that. Run was one of the ETFs that we were looking at, and it had drawn a nice, was drawing a nice bull flag, and it broke out to the upside quite nicely out of that bull flag. This would still have some room to run, probably into this 32 area, but we are a little late on this bull flag now. If you were watching it and got in it, great. Congratulations. SunPower, another one of the solar stocks with a bull flag, and it broke out as well. So, yeah, there's some nice movement going on in this space, but again, like I said, you know, if you're just you know, looking at this now, you're a tiny bit late. But we did point this out earlier in the week. GOGO is one we pointed out last week. This is one that I'm in, and it has broken out of this base quite nicely. Really good move here. No reason to think, you know, we've got a little bit of, you know, very minor resistance right here, but no reason to think this won't continue on up. You know what would be really interesting, this is drawing a really nice cup here, isn't it? So it'd be really interesting if this were to say, you know, continue to the upside and then put a little handle on this and then break out. That would be really moving. I think this would get a lot of attention if this kind of cup and handle breakout, because right now it's just coming off the low. But it'd get more attention. It'd bring even new buyers in after drawing a cup with a handle and then breaking out. So I think there's still lots of room for GOGO to move here. But, you know, getting a little late on this move, you might want to wait until this handle starts to form. Palantir was one that we looked at last week. We were looking at this base that it was drawing, you know, saying, is this a bit of a bull flag? Well, it tried to break out the downside of that and then popped right back up immediately and has now moved out the top of that and, you know, moving up into close this gap. So it'll be interesting to see if this can keep going. If Palantir can keep moving like this, then we've definitely got a risk-on market on our hands. And one last, this is a new potential setup. This is not my favorite setup here. And it's in a space, I'm not going to be taking this one, to be really honest. I don't like the space. I've been burned in this space a few times. But it is an interesting setup. It is a nice looking bull flag, and it is breaking out of that bull flag, and you're not terribly late. It's still fairly risk defined. There's still room to get in here if you want to play this. But like I said, I'm not going to play it. We do have a fair bit of overhead resistance, and it's a funny space. But it is a space where if this gets going, it could really move. People do like to jump in on this space. This is something that this is a company that could get attention on Wall Street Bets. There are a lot of people who follow this, who will chase this. So if the market continues to go risk on, this could do fairly well. That's all I've got for you. We don't have the calendar out for next week or for next month yet. But it looks like Nick is doing a session tomorrow afternoon. And then I'm going to be taking Thursday off. We will not be doing Ticker Talk on Thursday, so there will be a Ticker Talk the following Thursday. And and we'll have the calendar out for you shortly. So hope everybody's had a great Memorial Day weekend, and hope you all enjoy your evening. Thanks.